Hey everyone, welcome back to my channel. Alvin here. Today I kind of want to talk about finance and like in 2025 what I think as an average, Singaporean looking at finance and then trying to build, wealth and build up my finance, be more financially free, that sort of thing. And if you've seen my progression from living paycheck to paycheck from zero, to 100,000, and now God knows how much I have. I will maybe do a review, down the road if you guys are interested. But this is not really about me. This is me looking at what is going to happen. If every market condition remains as is, because much as I don't really money into CPF because I'm not really a salaried worker, so to speak, So, and I'm at this point of juncture looking at, other instruments to put money, the interest rate is still high relative to what it was, a few years back. The money market funds is still pretty attractive for someone that's, self-employed, so to speak. And the CPF has actually done a roadshow, a festival thingy, CPF. Much as I'm not, putting money with CPF, I have CPF, the money is basically from, my past salaried work. And I, still have money there, so to speak. But from what I know, the CPF board actually put up quite a series of videos of their festival, the Ready for Life Festival, which was held on Marina Bay Sands 2nd November. And to those that are relatively new to finance, if you are late 20s, early 20s, late 20s, whatever, you've just started your finance journey, you probably need to just go through the whole CPF, event that is on their CPF website. It's pretty wild and very, very good knowledge and information for newbies if you're not really in tune with this, finance thingy. But for me, who has watched so much, I kind of skip quite a few because I already know in my head what's to expect to reach financial place where I'm comfortable. But there is one thing that Mr. Vasu Menon, Managing Director of the Investment Strategy Wealth Management Unit of OCBC, he is pretty, frequent, with CNA, talking about finance, everything. You probably have seen him before. He bringing up this pretty interesting graph that talks about the money market. The money market right now, as it stands, is $6.5 trillion US dollars in money market funds. It can be T-bills, it can be fixed deposits, it can be anything, everything that's you park money to earn an interest. Notwithstanding stocks, like your REITs and all that, those don't really count, but just instruments that the banks or investment, companies have, put in place because interest rate is still high. So interest for just to park cash with them, you earn an interest. Like for me, I actually physically went down to Tiger Brokers, the event. It's 6.8%. 6.8%, for two months. 2 months. I parked 40K in it. And then they will top up to the 6.8%, even though the money market is 3 point something. So there lies the issue. The money market fund is through the roof. The graph says it all. It's so high right now that in 2025, I believe the Federal Reserve and all other markets have to cut rates down further. Why? Because everybody is saving. Everybody is saving, everybody's not spending. When everybody's not spending, for me who has actually studied economics, when everybody saves, the economy will not do well. That's a fact. One person save, not so bad. A few people save, not so bad. But the entire planet saves and don't spend, it will collapse. So the Federal Reserve have to stir and instill confidence in the economy by bringing down interest rate. Why? Because when they bring down interest rate, the people will start, figuring out that their money needs to move somewhere else because money markets, the interest rate will drop. And of course, from a saving point of view, if people start saving more, they will probably not, spend, and then when you stop spend, everybody will, the companies right now, all the stocks are at sky high price, so the stock market is through the roof. The S&P 500 has rallied so much. It's in the bull market. To sustain that rally or so-called, that trajectory of going higher and higher and higher, the companies will have to cut costs to show the shareholders that they are doing well. And where to cut costs is to cut workers, cut labor, cut, the people that are actually working in the company, just to save that money so that they can show on the balance sheet that they are doing well. So there lies the issue. If people start saving, economy doesn't do well, companies will cut costs, cut labor, and everybody will be doom gloom there. So the balancing act of the Federal Reserve have to taper a bit, interest rate have to go down further, and that's where the money market people who are park their money, it has to go somewhere else because the interest rate is not there anymore. And it goes into other instruments like stocks, investments, properties, anywhere and everywhere. And it's really happening. Like I said, the S&P 500 is really gone up. Collectibles like Pokemon cards, right now it's in a bull market. The bull market is sustained not because stimulus packages from the US government that they're giving free money to them. It's not that. It's the people that have the extra cash that's from the money market that's moving towards these collectibles that they think they can earn an investment out of it, out going down the road. So that lies the issue. I believe 2025 will be a bull market. Having said that, it does not mean that it's a straight line all the way. There will be pullbacks. And from what I understand, Mr. Vasu, he did say that the markets, occasional pullbacks, there are risks, the geopolitical risks, like the war is still happening. Like right now, I don't know, the nuclear, this nuclear thingy that's happening, this rumor of nuclear, the use of nuclear powers from Putin himself, from Russia, makes the point that people are scared, volatility will happen, but on a more longer term, from January to end of December, more than likely the bull market will sustain because the money market funds, the money market itself has so much money down there that it will support this move. Just that at this moment, to buy at this rate, you just have to expect, you must have dry powder basically. What I mean is, for me, an average Singaporean right now, you must have dry powder to buy into those pullbacks, and then more than likely it's going to be a long bull market down the road. For me, I'll just stay invested. I've already done the trading part of it, in and out of the markets. It doesn't make any sense. Long term, it's more beneficial to just buy when the pullbacks are in and just enjoy the ride. Because again, the history has shown, again, this is not financial advice. I'm not asking you to buy anything and everything, stop picking everything. I'm just telling you that from 2025 onwards, it's more likely a bull market because of this graph that people are holding cash at the moment. So this is just a short video from me. I've actually went to Tiger Brokers event to park money, and then they actually gave a small little plushie and a few other goodies that I posted on my community tab. And of course, they even give a gift voucher, $30 gift voucher. That's the thing. Money is still there for the taking because interest rate is high. So that's why everybody is not even buying into stocks or anything. Even though the rally has already maintained upwards because people are slowly going into it, that doesn't mean that you should FOMO into it, because pullbacks will come in. And if you're not have the stomach for buying into, equities, I urge you maybe just to dollar cost average in. I'm doing it. The S&P 500 dollar cost averaging into it, not even looking at it, to be very honest, because I've not done it. I'm going to maybe showcase it when I am year end, 2025. I'll just show what I did, and see what it has gone up or gone down. So that's that for me as an average Singaporean, looking at what is shown for me, what I think it's logical, and these points that Mr. Vasu said makes a lot of sense. So anyway, comment down below, what you think, if 2025 is a bull market or a bear market. You can comment down below, and I'll see you in my next video. Take care, everyone. Bye bye.